Welcome to Money Internet. Cryptocurrency, or crypto, has been gaining popularity in recent years as a possible alternative to traditional forms of money. Even though it is still a fairly new technology, many experts believe it has the potential to change the way we think about and use money. In this video, we will talk about the current state of crypto and how it can replace money. We will look at what the government is doing, how it is preparing for the possibility that crypto will be widely used, and the pros and cons of using crypto as a form of currency. Please remember that this is not financial advice, and viewers should always research before making investment decisions. So, stay tuned, and let's dive into the world of crypto to find out how it could change the future of money. Explanation of the current state of the crypto market and the potential for crypto to replace traditional forms of money. There are, of course, also some huge problems and worries with this scenario. If people use cryptocurrencies more than cash, traditional currencies will lose their value with no way to stop them. If cryptocurrencies were to take over completely, new infrastructure would need to be built so the world could adjust. There would be problems with the change because cash could become incompatible very quickly, leaving some people to need their assets. Big banks and other financial institutions would have to scramble to change how they do things. It's important to note that many businesses offered to accept the cryptocurrency during the initial Bitcoin craze. Still, that number has steadily decreased, bringing back doubts about its use as a currency. A future with cryptocurrency would hurt consumers and financial institutions, but it would also hurt governments. Control by the government over major currencies is a key part of regulation in many ways, but the government would have much less control over how cryptocurrencies work. Governments could no longer, for example, decide how much money to print in response to pressure from inside and outside the country. Instead, independent mining operations would be in charge of making new coins or tokens. No matter how investors feel about switching from regular cash to cryptocurrencies, it's out of their hands. There is a lot of talk that the cryptocurrency industry is a bubble that will burst, so it's also possible that predictions of cryptocurrencies are exaggerated. If you enjoyed the video, please click the subscribe button and hit the bell icon. Discussion of the different types of digital currencies and their pros and cons. Digital currency is a broad term that can be used to discuss different kinds of money used online. There are three different kinds of money. Cryptocurrencies. Cryptocurrencies are digital currencies that use cryptography to ensure that transactions on a network are safe and legitimate. Cryptography is also used to manage and track how these currencies are made. Virtual currencies. Virtual currencies are digital currencies that don't have to follow any rules. Developers control them, or a founding organization comprises people with a stake in the process. A defined network protocol can also use algorithms to control virtual currencies. Central bank digital currencies. Central bank digital currencies, CBDCs, are those controlled and issued by a country's central bank. CBDC can be used in addition to or instead of traditional fiat currency. Unlike fiat currency, which exists in physical and digital forms, a CBDC only exists in the digital form. What are the benefits of digital currency? Transactions with digital currencies can be done much faster than with traditional financial institutions. How digital currencies are built makes it easy to track funds, especially cryptocurrencies that use blockchain technology. Legacy institutions can't provide this level of service. One of the best things about digital currency is how easy it is to get. Anyone with an internet connection can log on and buy money or mine for their favorite coin. What are the drawbacks of digital currency? The financial industry that has been around for a long time is heavily regulated, which helps keep things stable and ensures that no bad things happen. While digital currencies eliminate the need to store personal information online, your money may still be susceptible to hacking. In a handful of instances, firms storing currency have had it stolen in an assault. Traditional forms of payment have stood the test of time and have a bright future, but digital currency is still very new and in its early stages. Because of this, the future is still being determined, and you can't be sure that your digital money will continue to work or keep its value. Analysis of government actions and preparations for the potential widespread adoption of crypto. Depending on the country and the policy in question, governments take different approaches to the possibility that cryptocurrency will become widely used. Some governments have supported cryptocurrency and blockchain technology, while others have been more cautious or hostile. Governments have generally focused on regulating cryptocurrency to stop money laundering and other financial crimes and protect consumers from fraud. This has led to the creation of laws and rules that require cryptocurrency exchanges and other companies working in the space to follow Know Your Customer, KYC, and anti-money laundering, AML, regulations. Some central banks have also looked into using central bank digital currencies, CBDCs, which would be digital versions of their national fiat currencies. In a world where cryptocurrency becomes more popular, these could be a way for governments to keep control of the money system. Overall, governments are keeping a close eye on the growth of cryptocurrency and blockchain technology. They are also taking steps to regulate the space and looking into its possible benefits. Examination of existing alternatives to traditional forms of money and the potential for them to compete with crypto. Digital or electronic forms of money, like electronic funds transfer, EFT, digital wallets, and mobile payments, are some alternatives to traditional forms of money. In recent years, these alternatives have become more popular because they are easy to use and convenient. But they are likely to only partially replace traditional forms of money because they are decentralized and are still controlled by banks and other financial institutions. On the other hand, cryptocurrency is decentralized and runs on blockchain technology, making it a unique alternative to traditional forms of money. Even though cryptocurrency is still a new idea that has yet to catch on with most people, it could compete with traditional forms of money in the future. More businesses and people are accepting and using cryptocurrency, and blockchain technology is being used in new and creative ways. This could make cryptocurrency and traditional forms of money compete for more. A step-by-step guide to understanding and navigating the crypto market, including tips for identifying profitable cryptocurrencies. Blockchain is the underlying technology of cryptocurrencies. It is a digital ledger with no central location that keeps track of transactions across a network of computers. There are thousands of different cryptocurrencies on the market, each with its features and uses. It's important to know their differences and how their technology works. Market capitalization is the entire value of all coins in circulation for a particular cryptocurrency, and trading volume is the number of coins traded in a certain amount. With these numbers, you can get an idea of how popular and long-lasting a coin is. A strong development team and community can show that a coin is well supported and has great potential for the future. There is a document called a white paper that covers the inner workings of a cryptocurrency and the technology it employs. The coin's potential and applications are described in the accompanying white paper. The formation of strategic alliances with large, well-known entities can vouch for a cryptocurrency's practicality and future promise. Read up on the most recent market analysis and news about the cryptocurrency market and your currencies of interest. If you want to lower your risk, investing in multiple different things is better. The value of cryptocurrencies is highly sensitive to market fluctuations. Preparing for such volatility is crucial, as is investing only with money you can afford to lose. Remember that cryptocurrency is highly risky and speculative. Only invest what you can afford to lose. We hope that you found it informative and valuable. If you're interested in learning more about cryptocurrency and financial tips, check out our channel for more content. We look forward to sharing more insights and information with you in future videos. Remember to subscribe to our channel and hit the notification bell to stay up to date with all the latest crypto news and analysis. Thanks for watching.